Well, it's all Christmas cheer here on Trading Hour. Hello and welcome to the show. I'm Sonia Shenoy. With me is Pavitra Parekh and Sonal Busra. As you can see, we are bright and cheerful in our Christmas festive colours. But so is the market, bright shade of red. I think Christmas belongs to the bears today, right?
This is for after a long time that I'm seeing that. Usually we talk about Christmas rally, but today we are saying that yes, Santa's come to town with a lot of red.
And Santa's perhaps lost his way somewhere along the line and hasn't reached Dalal Street yet. But let's find out. We have a guest joining us. First up, Rohit Srivastava, founder and strategist at Indiacharts.com is with us. Just to apprise you of the market, it's a steep sell-off that we're seeing in trade this morning. In fact, the Sensex is now down over 560 points and it's almost a 190-point slide on the Nifty as well. Rohit, thanks a lot for being with us and greetings of the season to you. Wanted to first start by asking you whether, now this key level of 18,000 has been breached on the downside. What's the next level to watch? And do you see this sell-off exacerbate?
Yeah, season's greetings. And I do think that the top that we have seen is probably an important one that will stay for a while. So I don't think we are going to run off to new all-time highs anytime soon, which means that even the breakdowns that we are seeing, and specifically the 18,000, 18,100 range, which is the trend line from the bottom that we made in October, is an important breakdown level because it sort of breaks the entire trend that had been going on since June, and I think that sets the tone for what might lie ahead. So, in the very short term, though, I think we may get to a point where, there's support coming in at the 20-week average, which is at 17,845. Unless we really close below that, probably into the year end, you could get some kind of a bounce back because typically volumes dull out, a lot of traders are away. So a lot of the selling may, end up being complete today. And it is possible that you get a year end, bounce or rally into the month end and probably early part of January. But my sense is that we'll still make a lower high and probably end up going down again and need to be open to further downside. Now, if we do somehow end up closing below 17,845 for today because it's the weekend, it would signal a continued sell-off towards 17,000. But my first sense is that probably won't happen. I think you will get a pullback from here as the sell-off gets to a short-term oversold condition.
Okay, we might get a pullback from here. Rohit, hi, good morning and thanks for joining us. This is Pavitra. What are you making on the Nifty Bank? Currently at around 41,900. We've seen a little bit of a correction come through in the PSU stocks over the past week. What is the kind of targets that you're working with for the Nifty Bank? And if you can also specify for the PSU banks within the space?
So the immediate support for the Nifty Bank Index is going to be around 41,840. We are pretty much there right now. If we don't hold that, maybe we dip further then towards around 40,800. I think on a broader basis, I think you can go below 40,000 eventually. The PSU Bank Index also, I think it's been a strong rally. But the kind of volumes you've seen, usually when you get such a feverish volume rally, once it completes, which I think it has now, you don't really surpass those highs for several months to come. So whether we call it a correction or whether we call it a consolidation, I'm not seeing new highs in the PSU Bank Index for quite some time.
Okay, so no new highs in the PSU banking index. In a scenario like this where the signal is that yes, it could be bearish, any space where an investor can go and hide or any trader looking at any of these specific sectors, Rohit?
So I'm expecting a very broad-based decline, which means I don't think there will be positive performance from any sector. You can only look for relative performance. And in relative performance, the only place that you might look at is pharma. Now, pharma has been a dog for quite a while, but in difficult times, sometimes money can get allocated towards that sector, and then you get a bounce back. Then other things are falling. So if at all I have to play the relative game, it would be pharma. But otherwise, I think broadly, most sectors are likely to be under pressure because this is a situation of liquidity tightening around the world, which is not going to spare any particular area. Now, if someone does have an multi-asset class approach, he can have some exposure maybe to things like gold and the currency in terms of USD INR. So if you can build a long USD position which then directly impacts gold prices in rupee terms. Maybe not in dollar terms, because in dollar terms it's possible gold prices still come under pressure when the dollar is rising. But because the rising dollar pushes up the USD INR, it actually has a positive rub-off on gold in rupee currency terms. So those are alternate asset classes to really consider in times like this, rather than just the equity asset class.
Actually, that is a viewpoint that has been echoed by a lot of other experts in the last many days, that pharma perhaps is a space that stands out. For the slightly longer term, even if this is a market that is going through some sort of a correction, for a long-term investor, would you buy into the erstwhile leaders, whether it's an Axis Bank, an M&M, an ICICI Bank? Is this a good time for long-term investors to be sort of creating a shopping basket and looking at some of these large cap names? If yes, what tops your list now?
No, I think it's a little early to start talking about long term, because like I said, if I'm calling this, I've been calling this entire rally a bear market rally, and we're actually getting into the eye of the storm where you get a broad-based decline. I think I wouldn't want to really jump in with any big position building. I think let's give it time. Let the downward trend unfold. Let us see where support comes in. Then we'll start looking at those possibilities.
Okay, Rohit, just one final question on what you make of this defense space. We got that the proposals of all of those acquisitions approved as well, 82,000 crores. The incentive in that area continues to rise. We also have the budget, which is very close. Do you think this is a space which in an otherwise bearish market could maybe stand out?
No, I think defense as a sector is
seen the gains.
Yeah, see, what I'm trying to say here, it's still a good sector. Okay, there's nothing wrong. Earnings are growing. There's always allocation going to be there from the government. But yes, it has had a pretty strong momentum rally. And in a broad-based decline, I want to really see it's a good testing time, right? So for sectors that have done well, when you get a market correction, you also end up getting a test of relative strength. So let us go through that test and then take a call as to what has stood out. I think that's the better way of looking at it.
Okay. All right, Rohit, thank you so much for joining us and speaking with us here. So the markets continue to see some red, and it is a 180-point decline on the Nifty as we speak. Let's slip into a short break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.